Hey everybody, great to be back here with you. Mike Fairborn for Trading ThinkScript, where we do look at ThinkScripts. We trade ThinkScripts in this class. It is nice to be back with you today. Hey, was looking at a lot recently at a lot of moves within the market in terms of momentum. What was behind that momentum? Are there ways to kind of track that momentum? We've seen basically technology lead the way. Technology communication services lead the way day after day after day. But were there early indications of that change? And are there things that we could look at in terms of tracking that momentum, catching it early on, seeing what it is behind the scenes using a volatility adjusted indicator? Turns out there could be some indications there. So I do want to dive on into that with you today because, hey, I'll tell you what's been moving is technology. Other areas could start to move though, but we want to see potentially those same indications there using momentum connected with that volatility. So some interesting indications there. We are going to kind of harness a little bit more into that ATR, more than we've ever done in terms of what the ATR can do for us. So excited to go into that with you. Excited to see you guys here. We've got plenty of you here. I did see Paul up front here. We've got Wacky Whack. Welcome. Good to have you here. Oh yeah, and Barb, you mentioned that. Yep, Barb's out. I just think for a couple of days there, but should return. No doubt about it. Life in the fast lane. Good day to you, sir, as well as Michael. Good to have you here. JV, Rojo, Sharon, Will, Sunset Guy. We've got Rocky and others. Robert, hello, Lakshmi, on down the line. Duke, welcome to all of you folks. Any questions, comment, throw those in the chat. We are graced with the presence today of KH in the chat, Mr. Kevin Horner, a good friend and colleague of mine. Great to have him on board. Be sure to follow Kevin on X, Kevin Horner CS. Mine is Mike Fairborn CS as well. And let's dive into some disclosures so we get going here. Okay, equity and index options carry high level of risk, not suitable for all investors. Information here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Paid money software application for education purposes only. Backtesting results presented are hypothetical, and there is no guarantee that the same strategy implemented today would produce similar results. Now, investing does involve risk, including for subproducts more than your initial investment. Past performance of any security strategy does not guarantee future results or success. And a good look at our futures there, because we do like to pull up our futures. We'd like to look at the charts. And so we do have some futures disclosures for that. We don't trade futures here, but futures and futures options trading does involve substantial risk. It is not suitable for all investors. Now, having said that, I've got to do this. I've got to pull this up and just start sharing right now our screen and just take a look at where we're at. Folks, we've been saying before in the past, now I think you guys knew this behind the scenes, as we kind of dissect a little bit of momentum and what's been going on behind the scenes. The you have to say volatility did increase within this group here specifically. I should say, well, with the market itself. But looking at the ES, folks, and this has been noted previously, about 40% of that comes down to the Mag 7. Now that number is going to vary. I'm just going to say approximately 40% of what we're seeing here. In fact, I'm happy just to go to the SPX because we'll use that just as it was referenced. We had a measurement gap over here. Boom. Wow. That was at a prior high. Normally prices might stop there and come back down and test near a 7,000, a big range, a big round number. No, we broke up higher here. And, clearly, and I think that that is tied into some of that Mag 7. I'm just going to highlight that over here. And you can just see, this is interesting too, because controlling maybe like 40% of what's the S&P 500, there's a look at the Mag 7. Now, what's kind of interesting here is it does look a little bit flaggish, but it could control a lot of the movement of the S&P 500 going forward. And I just bring that up because, yeah, it's sort of flagging here. Kind of interesting. You got some big volume, about volume spike, and we'll see if it does kind of one of these consolidations and does it kind of go up. Now, it can go up and the market could still consolidate a little bit down, whatever, but technology has been quite strong, clearly. So, what on earth has been behind this? Now, if I just take a look at let's just do this. Oftentimes we'll reserve this for the class on Friday where we go through market posture You guys get a portion of that in this class because we're towards the end of the week and we want to kind of look and see what's been going on. Actually, I'm trying to go here. What am I doing? I'm here, right there. Okay. Markets and sector grid. Now, if I maximize this and just highlight it, so using think scripting tools to kind of help us point us in the right direction, and maybe spot some of these going forward that have been really, really strong, but tied to an ATR plus momentum. Look at this. What's been moving? Infotech, communication services. Notice that there's just two of these that look like the other. The other being the S&P 500. We just said about 40% is, uh, you know, 40% of that is going to fall into the Mag 7, which folks, we're going to say definitely tied into this group here. I say this because you've got Google over here on this side, Google Alphabet on commercial services, but everything else over here. So you're really getting this. But what has been behind that? Now, I want to talk about, um, compared to everything else, by the way, we've been basically consolidating, flagging. There have been some flags, and we could see some of these start to move, but let's drill down into that a little bit more and see what we've got. So as we take a look, and we'll use this stock as an example, let's just say GLW, which by the way, is somewhat interesting in the sense of what's been going on behind the scenes. Now, everything we discuss here are just example stocks, but it is interesting. We can point out news events that, kind of have helped to fashion this chart the way that it is. You guys remember Intel? And do you remember over here, we talked about it, at least in the swing trade class, we talked about we hit it a little bit here, but our trades were very, very limited to like these kinds of a flag type move. Okay, it was very small, didn't capture the larger run. But we talked about an investment by Nvidia over here of like I want to say $1.5 billion or something into Intel. Well, it turned out that it flagged through that whole time frame, but when it really started to run, look how it ran above this range and just took off. Now, what is interesting, I'm just going to kind of flag this again, is NVIDIA just made another investment into Corning. This is just news. It's not a recommendation. We're just going through this. This one, in this case, more than a little bit, I think close to doubling or a little bit more than doubling the investment in Intel into Corning. With three factories focused on AI production. Interesting. I don't know all the details behind it. I just know that that's a rather large investment. If you guys want to take a look at that, I'll throw it out right here. This does, believe it or not, tie in to our discussion today on momentum and what could be behind it, what could be driving momentum, because the indicator we're going to be using can help to kind of spot some of this, show us indications that, yeah, there might be something that may be tilting it a little bit outside of its normal trading range. Now, coming back over here and looking at it full screen, back to GLW. By the way, little teeny side note. Anybody know what GLW stands for? What it stood for when they made it? Now I'm going to say it before you all look it up on AI. I'm kidding. No, but it just stands for glowworm. Um, glowworm. It was about glass and the glow, etc. But anyways, that's what it stands. That's what it was originally. Because you say Corning GLW, what the heck is it? Anyways, these guys were very. I mean, they were instrumental going back to let's say the LCD screens. That was kind of big, and you can go back and look at the history of that. LEDs as well, the lighting behind it, the glass lighting. Anyways, a little bit of a history there on this, but I'm going to take off our standard sort of some of the indicators we've looked at in the past. I'm going to put on an ATR, average true range. Now, this is built by Wells Wilder. It was out of the same time frame that he came up with the RSI, the Parabolics SAR, but he had an average true range. Let's click on it right now and highlight it. It was right about 1978 when he came out with this. In fact, I'm gonna make it a little bit bigger. In fact, there were a few different manuscripts or books that he came out around that time frame. But there is an ATR right there. Now, what do you notice about the ATR relative to where it had been previously over the past year? What are you guys seeing? Are you guys seeing anything here that might give us an indication of potential strength? Maybe a significant change in the ATR? I mean, you know, we actually broke above an ATR range. about right there. You guys got it. Yep, glowworm. Nailed it. Yep, right there. But you see that right there? That is an earnings gap. Can't hide it. What is going on behind the ATR and what makes it interesting and why might we want to use it to use trading in ThinkScript for examples going forward in our classes, just like we've done with the TTM, relative strength, and others. Yeah, thank you, Sharon. You stated, yeah, absolutely, in the most concise response ever. Up, exactly, and it is up, and it broke above that range. Now this range is all over here, that range through there, but it was earnings related. Sometimes that can create an impact, but we're not spotting it through earnings. We're spotting it through an ATR. Okay, average true range, if you break it down, what we know is A is average. Average in terms of what Wells Wilder came up with was 1/2 of a moon cycle. Moon cycle being 28 days. He split it in half and he came up with 14. Okay, so believed in cycles and he just used that as an ATR range. Now, what is he doing here with the true range? True range is simply just the high, any bar. This is an obvious bar where we gapped up, and that was on that NVIDIA. That was yesterday's announcement, right? That NVIDIA investment. That's the high and the low bar. Now, I got to tell you, on that day, the range, see it right there? It's just hidden. The range, the true range is what did it move over that day? What did it move? And we can pick up on it just by pointing to it right there. Look at that range. It was 20.5 points. Now, what was it previously? The prior day, it was 9 and change. That's 20. Why can be interesting is because it is a volatility adjusted line. Now, what some traders will do is they will use it as a sort of a, an exit point, right? And some refer to it as, they might tie it into like a volatility adjusted exit of sorts. But it's volatility based. Notice this line truly moves on volatility, and some traders will look at this as potential exit points and entry points based on this. Now, let me give you the logic behind it. The ATR gives us a pretty good baseline. It was roughly what, a couple weeks. It's a little bit more because we're looking at actual market days. Your market days would be about 10 for 2 weeks, so slightly more than 2 weeks. Fine, we can adjust this if we wanted to, and some traders will do that. Some traders will oftentimes use a 5. It could be a very interesting comparison. But a 14 lets you capture something like this and say, how does this bar or this time frame here, notice the size of these bars relative to that bar? Big difference. Big difference. It kind of gives you a reference point that's more extended in time. A little bit more grounded, I'd have to say. Although maybe the 5 days looks kind of similar to the 14, right? In this consolidation range, the prior 5 days before this break. Same thing over here to a degree. But it's kind of a smoothing mechanism too. Now, if we are saying a 1 ATR, 1 ATR, you know what we're saying? Is that within a 1 ATR range, greater than or equal, but plus or minus within a certain range of 1, we're saying that is an average true range movement because that's what we're looking at there. That's your 1 ATR right now. That's your 1 ATR. And this is your 1 ATR. And this is your 1 ATR. Now, where it gets interesting and where there could be a change is when you say, okay, I've got my average range and it goes up, here's 1 and it can go to 1.5, 1.75 on the higher end. You're getting higher. But if you start to go to 2 or greater, what are you doing? What are we saying? We're saying twice the volatility range. Now, folks, the reason why I park it on this two times greater than, just 2 times the ATR, 2 times an ATR, we're looking for that push in terms of price. But when you look at price this way, from what's average, it will really pick up on a lot of things. and it's specific to the individual stock. That's what we like about it there. Okay, it's really specific to it. So it's an ATR based on, Corning, uh, Intel, Broadcom, whatever, Google, whatever the case might be. Apple, it's specific to it. It could pick up on earnings. It could pick up on strength. It could pick up on potential institutional buying, where you're getting big buyers in there. It could pick up on money flow. It's so sensitive to price because we're saying you're outside of the range by what kind of a margin? 2 times. So doesn't it make sense that if you're outside of the range by two, something might be going on with the price that we could look at? Sometimes these happen right towards the bottom or the start of a move. Okay. That's what oftentimes we can see. If we go back and we look at something like a Google, we'll pull up some Mag 7s over here. What you're seeing over here, we saw some ATR shift from a downward move. And I'm going to flip this around a little bit and I'm going to show you what's pre-built in the system, which was really, really cool. Now, this is a little bit more advanced. I use this code to build us something really cool to help spot these. But using just a general ATR, I want to give you the background on it. Now let's add to it this ATR, and it's just called an ATR trailing stop. I'm going to click on it right here so you can kind of read about it. This works sometimes. There it goes. Study plots the trailing stop value, the calculation of which depends on a specific trail type. Now think about it. If we were to be in a company and it was going against us or for us, wouldn't we want to know if that ATR flipped the other direction by a 2 times margin? It could give us some pretty good insight that that trend might be changing. I'm going to pull it up right now so you can see what I'm talking about. Now, here is the default that they're using, and I'm going to change this. This is very, very important to change to whatever you're after. You can keep the default if you want. This is a 5. Here, let's click on it right here. So it does have that adjustment, the ATR, the average true range period. So what's Wells Wilder? 14, right? That's this 14 over here. If we're going to be using this, we can use that. Now, this ATR, they're using a really big move, 3.5 times the average ATR. I'm just going to say double. Double could be of interest. Let's click on it right here, and we'll click on it again. Now, this is fascinating. What this is doing when it changes here, and let me highlight this right here. Do you see the change? You see how long we stayed down. Look at this, down, step by step by step, until we didn't change. Something unique about this bar. Now, what was unique about it? The ATR was unique about it. It flipped. It went 2 times the average true range to the upside, and that's pretty close to the bottom. Now, is it a close above the high to low day? Yes, it is. But we also had a close above the high to low day here, here, and those were very, very moderate. The ATR was the difference because it doubled. There's something going on in terms of its normal trading range into where it's at now, and it picked up on it. What's happening here when you see this, what we're talking about specifically is this. It asks basically this setup that they've got, it basically says this: if today's close minus the ATR, and what's the ATR? It's a 14 average because we just programmed it, a 14 average times 2, a 2 ATR, okay, is higher up than where my stop was. In other words, where that closing price was, the prior close, as prices are coming down. If yes, then we move the stop down. Okay. If no, you leave it alone. In other words, when it flips, it can get you in. Now, this is an example of those companies that fit right over here into this momentum. If we really try to break this down and try to see, what companies were responsible for this kind of move. Now, you can see this in other companies too. But what I want to talk about today is using a simple scan, taking that code, basically scraping that code that's already there and just making it into a scan as opposed to an indicator. Okay, and that's what we're going to talk about next. Uh, let's get back to it though. Okay, so I'm going to go back to GLW. Oh, shoot, I just lost everything. Okay, no more of that because now I got to just keep doing this, but that's okay. Let's just do it real quick. ATR, there it is right there, the trailing stop, and we'll click it on. Oh, we've got to make our adjustment. Now, this is really quite wide. This is a 3.5, and you'll notice what happened on the 3.5. We got the general entry right there over the 5-day range, but it was a little bit late. Now, it's not to say that you couldn't use this, but come over here with me. Look at this long one. See how long that went? It captured this one coming down. If it's long, if there's a 3.5, it just requires what some traders would refer to as confirmation for them. Others would say there's just more conviction in the move now. There's more of a bounce. The Horner rule, for example. What better time to bring up the Horner rule than having Kevin Horner here with us, which he's looking at maybe a 2 to 3 day move outside of the hold, right? And maybe his would have caught it actually even earlier. But I'm just saying, you can vary this around. I'm going to just change it back to the standard Wells Wilder version 14, and let's just jump right back to it. Two, just a two times number. By the way, that's one thing that Wells Wilder, you can use whatever you want, but that was the one thing he talked about is just a two times. This is a little bit, this is AVGO. I wanted to go back to GLW to show you something. Okay, now you can, here are some of the moves over here. Uh, Something similar happened with a 2 ATR, kind of a long flat range. That shifted right there. Now you can equate that with other price moves as well. It kept you in for a little bit. When did that 2 ATR shift? Right there. That bar right there. So you broke below that level and it kept you out until it did it again. Now this is a little bit of zigzag, but that's a really kind of strong momentum move that we saw in the market. Now more recently, we saw it right there with that investment from Nvidia. Okay, on that was just that breakout move. So it did have enough to break above that range. Okay, does that automatically mean it's an entry point? No, but did it make a new high? Yeah. Now, could we look at other things that we'd focused in on before? What about this? What if you had a signal change over here? Yeah, the ATR flip. So I'm looking really at a bullish. Now today I've created a bullish and a bearish for us. A flip on both sides, just for kind of like a protective or a risk type strategy as well, if you're tracking this. But if you come over here and prices are coming down like this, like they are a little bit, maybe resting on a prior high. Well, what is that? That's the trend. Look over here. Notice we're still in check. I'll just put a check mark there. Check, check. How many of these did you see little flag patterns come in at where the ATR was still in line? In other words, we didn't go two times outside of the range to the downside in this case, right? We stayed within the 2 bar ranges. So there was nothing too significant. It didn't go down, right? It didn't. Okay, so let's do this. I'm going to go right over to the scan here. We'll pull it up and I'll share it. Remember, just as a quick note, we'll talk about this one first too. This is the bullish, ATR bullish break. So I've never dived into this much before, or dove into this much before previously. Now, notice we're only getting three. I've got to change this and actually resave it because I used the original indicator, but I wanted to use the Wells Wilder version. Now I've adjusted a couple of things up here. Again, think scripts aren't guaranteed for timeliness or accuracy, although if the data that's coming into the script is accurate and we have accurate data, then it's just a mathematical, output. You can change this up top. So just come up top. I'll save it this way. So as I send it, you guys will get this. But feel free to adjust it. I've made it such that you can do this. And by the way, I did have a look back period so that in other words, it will show up on the scan within a 2-day time frame. All right. And by the way, Quick note before I go any further, I just noticed this in the chat. Kevin reposted this that yes, there is a feedback survey, folks. If you're able to fill that out, that'd be fantastic. There's just two questions in there, and there's also comments and topic requests. I've taken some of the topic requests and built this out just based on momentum and a few other things, risk strategies, risk type strategies as well. But yep, so appreciate that if you're able to do that. I look at those, my manager does as well. And also be sure to follow us on X, Kevin Horner CS, Mike Fairborn CS. And then also, uh, oh, let's see. I was going to just show you. Yeah. In terms of, I erased it when I put the other one up. Sorry. But it's just the Trader Talks channel. Most of you are, I think, in our class on Trader Talks. But if you're not, love to have you there. There's a lot of great classes taught by coaches. You're going to see Kevin Horner's, a number of his classes. Be sure to take a look at his trading classes in the morning, kicking off every day. It's fantastic. Plenty of those in there, folks. But yeah, just you can subscribe, and I'll put this in. We've got 195,000 subscribers plus in, and we'd love to have you there if you're not already there. So just posting that in. Just it'll say subscribe right there. But anyhow, that's that. Now, coming over here, let me just post it. I will watch this. I'm just going to scan it now because we did change it. This is very important to change it what you want it to be. I'm going to resave it right now. Save scan. Yeah. So it's now saved with the Wells Wilder original defaults for the ATR, which is different, than the default for that ATR itself um, indicator. Okay. So coming over here, here are the list of these. Let me just go ahead and share it so you have it. But yeah, I think this we can work this in to some scripts, not just scripts, but well, this is the Think script, but other trading Think scripts that we like to do in this class. But I wanted to kind of pause on this because this one has really captured a lot of the big market movers. Here are some here too that might be also showing you some strength, but here is that script right there. Uh, let's see, here's the bullish one. Bullish. I got the bearish one as well, but that's the one that's signaling off the so prices coming down, but then a reversal of two times in ATR, so a totally different mix in terms of the volatility in that price range. There you go. Yeah, okay, so there you have it, and you can just copy and paste that, go to setup, open shared items. Once you copy it, paste it in here. I will have it in the description section for those individuals as well, viewing this as a recording. Hit preview, name it, but I just named it what it is. It's always helpful to find it. ATR bullish breakout or bounce. It's more of a bounce, isn't it? Um, well, it's breaking out in terms of the ATR is breaking out. We'll keep it there. But this is the list. So in the last 2 days, you got 36. If we wanted to find out if it was just one day, all we need to do is come in here, pull it up, and go into one day right there. Just change that. Change the ATR period, the ATR factor. Now, what's different here? I basically just scraped that indicator code. That's all I did. Use something pretty cool. But what I did is I added this at the bottom, the scan plot, look back bars and the long signal, which is connected to that indicator. And that's a simple liner just to get us the scan. That's it. Okay, so you guys have it, but let's take a look at some of these. I did want to take a look at that GLW because GLW, as you can see right there, is one of those on the list right there. It came up. It's within the last 2 days. Now, we wouldn't have got it today, and it would fall off if we're running this script mañana, tomorrow. We wouldn't see it because why? We've already had it for 2 days. There's your two. So if you wanted to say three or more, and you want to see this, say for example, over here, if you wanted to catch it through any of this range right there on that significant turnaround, you would have to catch it kind of earlier, right? You would have to, I mean, you'd have to extend it. Like if you were trying to get it over here, you'd have to have like 5+ days in terms of the look back. So that can be useful. I'm just trying to make it timely for this class right now. But personally, I like the 5 day because you can run it. It's going to pick up one. It's going to pick up five, whatever the case is. So let's do this. All right. Let's hit another one here. What else do we have? We've got some others in here to look at. Oh, Freeport copper. Okay, this is interesting too because instead of just looking at maybe notice there's a lot more in here that haven't been here as of late. And I'll tell you why, is because they have been on kind of the sidelines with the market. Now, excuse me, some of the technology stocks. So could the technology stocks flip? Sure could. They could flip and go to the other side, and then we could wait for the ATR. I'm going to pull you up the scan on that one next. We'll share it in just a second. Let's just take a look at FCX right now, Freeport McMoran, which by the way it's about 85% copper, 15% gold. Okay. Did gold that was gotta say a big momentum move. How did that hold up? Wow. Not one single dip below the ATR stop range. Not one until you got up to this point right there. And look where it got you out at, where that ATR went nuts. See that it dipped right there? It said out. And by the way, what happened, just in hindsight, because this is fun to do, we look at the back, the historical stuff here to also try to get some insight what could happen going forward. I'm just trying to gather data points. But look at this over here. Top, top, and top. When we had massive vol at the high, folks, we haven't broken through that level yet. And where did that hit? Right there. X marks the spot. See that? And it just dipped. But that's kind of crazy that we were able to stay in where? Right here. This whole time. In fact, just to be honest with you, it was right off this bottom. And there was a consolidation, no new lows made. And like what we said before, you're getting potentially an initial signal here, higher low, and then you can look at other things, but you're saying, man, the ATR vol is on our side here, and then it just took off. And other indications, there's a lot of other indications here. We don't want to forget what we've learned. We don't want to ever forget what we've already learned, particularly in this class and others, and a lot of stuff that Kevin teaches. Trends, patterns, breakouts, whatever. It had it there, but it just stuck with it. Okay. All right. So we just had another one occur right here. Now let me point this out to you. Um, we a couple things just as we assess the chart too. Notice it over here. It did break. There it is. It broke it right there. What is it breaking? The 2 ATR. So we know there's a longer term trend that is a higher high, just as an indication. What are we waiting for next? Well, some traders might say, well, okay, cool. I don't know if I want to just get right here, but maybe I'm asking on any stock, right? Maybe it comes back here, bounces, and then comes up or something, and the volatility has not changed when you're getting your next indication, your next potential breakup. There's a lot of these we could look at here. Today, I really had to spend the time to kind of go through this. This was an interesting one too. This happened over here. There was just so much of this. A little bit of a sideways. When you first got your volatility, folks, you stayed into a sideways range until you began to make kind of a higher low. Volatility confirmed right there. You've been stuck ever since. Now, these are just big runs, but when we're looking for momentum and what we've seen in the market recently, this is one of the indicators that really just kind of stuck out. Let's hit the other one real quick so we could share that too. I think I need to adjust that one as well. I did not adjust it yet. I just hit the bullish again. Let's go to bearish. Oh, right there. Bearish. Right there. Okay. Bearish break. Now, what is this going to do? This is going to give you an idea of those that are maybe starting to show some potential weakness. Before I go into it, I got to adjust it, and here I am again. So I kept the same ones here. We can say 3 days, fine. 3 day look back, but here's 14. Here's 2, twice the range. And we'll come down here, and that's it. I'm going to save it, though. Save it and share it And here you go into the chat. Okay, there's the bearish one right there. It should be coming through. Okay, so let's run this one as well. So you guys can see this. We'll take a look at a couple of these so you get a sense of it. But I was taking a while. By the way, scanning in the S&P 500. Okay, take a look at this. We're seeing more, not quite 50% more, but getting there in terms of the number that we're getting. And if you come down here, what have you seen? Well, there's a lot of oil coming in here. I like to throw this out because it gives us some macro perspective too on different sectors. But here you go. Some of the power, wow, power even as well. We have seen, geez, you'd have to say by and far that area. We have not really seen a breakdown yet. Now, when you start to run this and you start to see a breakdown, whether you're running this here or just putting it over here and waiting for some of these companies to give you a highlight that has flipped. In other words, we start to count the dots on top, the red dots, meaning that we had hit the 2 ATR. We're coming back down a little bit. Then you know. Well, then you have an idea. Well, you know that volatility's flipped because that's what the script does. Again, those scripts aren't guaranteed for time, distance, or accuracy, but I want to throw it in there for you guys. JCI, MLM, some others in there that did flip. Ooh, Oxy did too, huh? Oxy. Oh, okay. Yeah, and this one had been strong for so long. Where did the initial click get? Wow, that was really interesting off the bottom as a side note. And we really didn't recover from the initial 2 ATR, did we? We really didn't. We're getting another indication of another. And what is this showing us? Potential additional weakness. Post earnings too. But folks, I hope you found this informative and useful. Let's see. Is this ATR bullish bearish script exportable to a watch list? Yes. Yes, it is. You can, oh, here's the thing. So when you scan it, you can come over here because that's really kind of a function. It's a great question. You can scan over here within your watch lists as well. What are you scanning in? Right there. So you can scan it within a watch list. You could also do this too. Another function, let me just go back to the charts that would make it easier. Uh, what was this? Bull flag plus hold, whatever. Um, if this was like a watch list over here, you can just go click, click, and click through it. Say, for example, like that. That's saying bull flag plus Cajon. I'm not seeing the Cajon on that at all. Oh, yesterday. It's within a couple of days. And there's, yeah, I was just looking at it. Uh, there you go. This looks back. I think this one's got a 3-day look back period. Whatever the case. This was a past one we did. But anyways, there you go. Yeah. Let's see. What's class we discussed the ATR study on the chart. What we looked at in the past was a stop loss line, which was different. We didn't incorporate volatility, but we did that today though. AC. We discussed the ATR study on the chart right here. You know, this one here, and yeah, I'll point it out again. This is the one we went into. You can find out though other ATR studies just by going into the let's see. If I could do this again. There we go. Going into the playlist or something, and then just you can go down here. In fact, I'll just post this here. I did one on, let's see, earnings last week, and I'll tell you what, earnings, I never get any traction. Nobody likes that one. Earnings never, uh, earnings is not a big one. There you go. But that's the playlist for the Think script. You can scan through it. It'll just show you all of them there. You can just do a control F and maybe find it. That can be helpful too. All right. Uh, Mike talk. All right. Yeah. Hey, anytime, Wiley and all you guys, good to be with you. And yeah, if you got value out of this discussion, just do me a favor, just smash that like button. Just lets me know that you're this is resonating with you and you're getting some value out of that. Lets Kevin and I know that you appreciated the presentation here today. It is designed to help you guys, like we talked about at the very beginning, and that is to find momentum, what we've been seeing in the market, that 2 ATR flip can really create some interesting trends. It can also give you some signs when maybe there's some risk, uh, potential risk that comes in because remember, you're going two times what you normally do over a nice window. When I say nice window, I'm talking about the 14 days. To some of you that are really into this, yeah, I'm talking about the half moon cycle time frame, as well as Wilder might think of it. But that's what we're looking at there. Those changes can be interesting, but a scan can help you spot that, folks. Put that on your watch list or whatever basket of stocks you're looking at today. It was really on the S&P 500. By the way, that scan that I sent through today, folks, that's all on the S&P 500. So when you run it, you've got to change those parameters around and save it if you want it to be that way next go around. So just keep that in mind. Another quick note, it's so cool on these, and we'll finish up on this. Over here on the left-hand side, yeah, if you want to find any of these, just go up here. These are all saved scripts, and they will give you, what's this, anchored VWAP, whatever the case might be. It will load up anchored VWAPs that match the current market timing environment. All right, everybody. Well, with that, like, subscribe, and there is a survey link in that chat if you guys are able to take that. That would be awesome. Just two questions, topic requests. Just lets us know that collectively we're doing okay on that. And oh, Kevin's already posted that at the bottom, but I just went ahead and did it again. I just caught that, Kev. Thanks, man. All right, everybody. Take care. Have a great rest of the day. See y'all next time.